Welcome to the AICPA Town Hall Series, your resource for the latest news and updates on pressing issues facing the accounting profession.
Good afternoon and welcome to the AICPA Town Hall. I'm Eric Auskerson, one of your hosts for today. Today is July 23rd, 2026. We've got a great program for you. I'm coming to you live from New York, and with me is Mark Koziel, who you all well know. And Mark, it's been board week. We got plenty to talk about. It's gonna be a number of different topics, but one item we will be covering is a profession update with you.
Absolutely, yeah. We'll just give it a quick couple minutes what we talked about at the board and the fact that it all started with member feedback, Rise 2040, what our members are telling us, and letting that shape the strategic direction of the AICPA and the profession.
Well, I'm looking forward to that, Mark, but we're going to kick things off. Let me just really quickly cover the agenda, but we're going to kick things off with Rob Nichols, who's the CEO of the American Banking Association, and that's going to be a really interesting discussion. Then we'll be doing the profession update. We have Mark Peterson here with us in the New York studio as well, and he's going to be providing the DC update. We'll have a technical update, then we're going to have open forum. But with that, we've already seen him a couple of times here. Rob Nichols is with us here in the studio. Let me introduce Rob. He actually has been on a town hall. Rob and the American Banking Association were great partners for us during the pandemic. You can see the bottom bullet here. Rob really played a leading role for America and the banking community during the whole pandemic shutdown and the PPP program. We all know that really well. It really played a huge role in keeping businesses going in America. But Rob's got a great background. Early in his career as at the Treasury Department, also led the Financial Services Forum, and you've been leading the American Banking Association over the past decade. So, Rob, it's great to have you with us.
Eric and Mark, thank you so much for including me. I look forward to the conversation, and I did really appreciate the partnership during PPP as we worked together to administer that $800 billion in grants to small businesses and merchants. That was a lift.
Yeah, it really was great. And we put a call into Rob. I've known him for a number of years. Put a call into Rob. Rob was a great partner. It was a really great public-private partnership, and I just think it's a time that I look back on. I'm really proud of him, proud of how we worked with you, the banking community, and how we worked with the elected officials.
Yeah, it was great. It was great indeed.
And we have such a collaboration between our members and the banks and the banking system for small business. That's what makes it so fantastic.
So why don't I think many know a lot about the American Banking Association, but for those who don't, why don't we
Sure.
We've got one slide here, kind of, you have 150 years. You're slightly older than the AICPA. You're 15 years older, 16 years older.
10, 11.
11. Okay.
Just celebrated our 150th year anniversary. Nice. The first 100 years, it was headquartered here, ABA in New York, the last 50 in Washington, D.C. Have about 400 employees. We represent 4,300 banks that are active in the United States, headquartered in the United States. And that represents about 2 million women and men who work in the U.S. banking system.
Well, the banking market has been evolving, just like the firm market here in the U.S. So why don't you talk a little bit? Earlier, you and I were talking about this. What's going on with consolidation? Where was the banking market maybe 10 or 15 years ago?
Sure.
You talked about there's some good M&A, bad M&A. Love to hear some insights on that. So
state of the industry first. Banks are well capitalized, not seeing a lot of loan losses. So we're in a position of strength at the moment. And so that's a positive thing. When I started at ABA, Eric, there were about 6,100 banks 10 years ago. There's now, as I said, 4,300. So there's been a trend around consolidation. And I'm frequently asked, is consolidation good or bad in the U.S. banking system? There's a little of both. So, for example, if there are two banks that have complementary cultures and complementary geographies, and they merge to create scale so they can deliver their products more efficiently and effectively in the local marketplace, that's great.
Sure.
That is great. However, when you see bank consolidation because of lack of succession planning or a regulatory impairment, that's where you get a little frustrated. So there's good M&A in the banking sector and there's bad M&A in the banking sector.
And just a little bit about the spectrum of banks. from the smallest banks. I mean, and the largest banks in the nation. You just were with
Sure.
one of the largest banks in the nation. They're members as well.
Yes, I was with the senior leadership of JP Morgan. That's our nation's largest bank. And we have 8 GSIBs, which are the globally active banks supervised in a special way. And then we have a number of regional banks. Then we have about 30 or 40 regional banks. Then we have about 100 what are called mid-sized banks. Those are banks between 10 billion and 100 billion in asset size. And then you have the bulk of the U.S. banking system, 4,000 and change banks that are all under 10 billion in asset size, really true community banks. That is the really lifeblood of the U.S. banking system. Ton of agricultural banks in the heartland of America, about 1,500 or so banks that really focus and specialize in ag and farm lending. And these can be banks, Eric and Mark, with 3-4 branches, 35 employees.
Well, Mark, I bet a lot of our members are close to those 4,000 banks.
They absolutely are, and they're interacting with their clients and their client relationship with those banks and the lenders, the lending managers that they have there. But I'm also interested because you talk about that consolidation, and you think about tech, right? ATMs were going to replace the teller.
Yep.
And with the consolidation, you would think there'd be this reduction of people in the banking system. How does that look today?
So it's a really interesting question. So in the last 30 or so years, there's been 2 million women and men who've worked in the U.S. banking sector. That number's been static. The type of jobs, of course, changed.
Sure.
But when Excel came out, everyone said, banks are going to shed a lot of people. And then when ATMs were created, everyone's like, the branches are going to go away and all the tellers are gone. No, the types of jobs change. We anticipate with AI, there'll be some of that too. But no, we've been at about 2 million jobs. But yes, like every other industry, the types of jobs will evolve.
We say that time and again with CPAs, especially, everyone talking about AI replacing the accountant. We heard the same thing with Excel when that came out. But what's interesting, though, is it seems like most of the banks and of all sizes, they're getting back into the relationship business. Are you seeing that?
Yes, absolutely. Well, in fact, that's how branches are morphing. A lot of people said, with all the, digital technology, branches are going to go away. Branches are not going away, as a matter of fact. What's happening in the branches is changing. So they're a lot more consulting. It's more like it's like an Apple Genius bar. So when you come in, you're in your 30s, you have questions, you've never had a mortgage, you've got some questions. You don't want to do that, through a mobile app. You want to go in and talk to someone and say, what are the questions I need to think about as I apply for my first mortgage? So they're more consulting, advising versus doing some of the bread and butter transactions. A lot of those are happening digitally.
You can run that question through AI, by the way, but they still want to see the person that be able to give them that comfort.
When you get to the complex stuff, absolutely.
Well, we're going to get in a little bit more about that in a minute, but there's a lot of parallels here. From it was much more transactional, going into the bank, making a deposit, doing a withdrawal, and now it's more advisory. Same with the firms. In some ways, it's moving from transactional to advisory. Well, let's just share a little bit. We've got a couple slides here. I want to talk about what you're focused on right now in 2026, but this is a slide that kind of shows some of the kind of things you've thought about over the past couple of years, I would assume.
Yeah, these are a lot of areas of public policy that we've been focused on. We've had, a very positive set of rule changes. So from a policy standpoint, Eric, number one, we're trying to do what we were calling regulatory right sizing. So not deregulation, but just making the regulations more tailored for banks. So let's think less about just the size of bank as a manner of supervision, but rather the business model and risk profile and the type of activities. So we think that's important. And then there were also some rules that were intended for larger banks that were being applied to the small mom and pop banks. And so changing that, rules that really weren't fit for purpose, is something we've been really focused on the last couple of years.
And that's almost from the Dodd-Frank to today. It's like,
yes. So Dodd-Frank had some important components to it for sure. And then there was some overshooting there also that we've been working for years to right size the regulation. No one wants deregulation. You just want it appropriately calibrated for the for the business model, activity, and risk profile of the bank. Unfortunately, in Dodd-Frank, it was just based on asset size alone. And that's not the best determinant from a supervisory standpoint.
Well, there's one thing that I think this community would like to hear about is this scam act in Congress. I mean, something that they're concerned about with their clients. So you're share a little bit about this. I know you're pretty passionate about it.
Absolutely. So there's around Fraud and scams are insidious in the U.S. marketplace, and we're talking hundreds of billions of dollars. Everyone knows someone who's been, a subject to fraud, and so we're doing a lot of things to work on that. The Scam Act would require social media companies to do their fair share to take down the fraudulent and scam ads. So right now, banks are kind of the goalie, to use a World Cup analogy. We're the goalie defending the customers and the clients, but we need the whole ecosystem to get involved. So a lot of these scams are created on the social media marketplaces.
And there's billions of dollars in advertising.
Billions,
right?
and then three of us get them through this device.
Right.
And so we're trying to get the social media companies to the table to do their fair share, and the mobile phone carriers. We get these fake texts all the time offering insurance, or it's China, or whatever it is. They're scams. They are scams. So we need those two industrial sectors to do their fair share. So right now it's just banks, doing all the defensive work.
And sometimes the firms get dragged into it with the client getting caught up in a scam.
Absolutely. Right, So we're just trying to get the whole ecosystem involved in fighting scams and fraud. So that's what the Scam Act is. And it's been not only introduced here in Washington, D.C., it's super bipartisan, but my colleagues from around the world are also introducing similar legislation in their parliaments.
That's great. And I in fact, I just got an email from my bank today about, scam, watch out for these scams that are coming now. And I think the banking profession, the banking industry has done a good job of trying to at least make awareness.
So we have two other campaigns very briefly that we're running. One's called Banks Never Ask That. And you can go to a website, banksneveraskthat.com, and where we're trying to educate and tutor and teach the American people what banks would or would not ask. We would never ask for your password, for your PIN number, for those things. Banks never ask that. So to the extent we can coach people not to click on those is helpful. And then the other one is called Practice Safe Checks. So we're encouraging the American people not to use checks because that has a higher rate of fraud than digital payments. But to the extent you're going to continue to, and some Americans want to, we teach them how to write checks more carefully. That makes it harder for the bad actors to take the check, change the payee name or the amount. We're also working very closely with the U.S. Postal Service to harden those blue boxes that all the criminals are breaking open and then stealing the checks and then washing them.
Wow. That's good, Mike. I mean, in the IRS, it's all, we're always thinking about, partner tax fraud. So I think it's something that, our DC team, we can think about this.
And I think partnering, I think we can help get that message out for our members out there listening to that. I think it'd be great for them to inform their clients that you have that banksneveraskthat.com and send their members there so that our members hear about it when it's too late.
Yes.
And then the same with the bank at that point. So I think all that proactivity we could do as a profession would be great.
That'd be great. And the campaign is run through humor and influencers. So it's funny and it's actually won a bunch of awards as a campaign.
Great.
So check it out. Banksneveraskthat.com.
Well, so here you kind of mentioned a couple of these items already, but I think there's a few that you did not.
Yeah. So two others. So we talked about regulatory right sizing and some of those issues. The SAFE Act, Eric and Mark, is another important piece of legislation we've been working on for about 7 years. So when I started at ABA, only 10 states had legalized cannabis. We're now at 40. 80% of the United States has legalized cannabis. And yet, because banks are federally regulated, so even if you're in a state where it's legal, banks are caught in the state-federal inconsistency. So this would just create a safe harbor so that banks in the states, my home state of Washington was the first to legalize, banks can do business, not just with the dispensary or the manufacturer of the product, but with the accountant, with the lawyer, and all the secondary companies and individuals and businesses that want to serve the cannabis sector that can't now.
Right.
So this is an important piece of legislation. We've got it through the House. We just need to get it through the Senate.
Excellent.
And then lastly, Eric, the Clarity Act. This is one that we're working on right now. And this is the dialogue of the banking sector and the crypto sector.
That's right.
Crypto sector wants to offer yield, interest, and rewards on payment stablecoin. There's a reason they call it payment stablecoin and not deposit stablecoin. They want to offer yield, interest, and rewards like bank-like stuff on this payment rail. Congress doesn't want them to. They found a little loophole in the Genius Act. We're trying to close that loophole in the Clarity Act, and we're debating this right now.
You just want them to have
Senate.
Proper regulation if they're gonna offer.
Yeah, Congress doesn't want them to for fear that deposits would leave a bank and then get parked in a payment rail where it doesn't create economic growth through lending. So Congress said, we don't want that to happen. We're cool with payment stablecoin. It's an important innovation. Let's be clear. But they can't be able to offer interest on it, because then if money leaves a bank deposit, gets parked there, that's money not being lent to the local community.
Sure.
That's the big difference. And so that's what we're litigating at the moment. That's the Clarity Act.
Well, now you've got a lot, Mark. I was going to let you maybe tee this up, because there's obviously we're always thinking about, tax policy, and this is kind of the list of ABA-backed tax provisions.
Yeah, so I don't know if you want to go do a quick summary on this. I have a couple questions on it, because there's a lot of commonality here.
Absolutely.
Where Mark Peterson will talk about some of the things that we're working on. Your R&D costs, it's there, and the permanent Section 179A. And then also the other one that caused great interest, the 100% expensive for equipment and machinery, especially for small business. I mean, that's like...
Couldn't agree more. I mean, when I think about, what we've done around expensing and R&D and the pass-throughs is so important. I mean, 1 out of 3 banks in the U.S. is family owned. 1 out of 3.
That's great.
So, they're small businesses, really. These smaller banks, they're just small family-owned businesses, just like a number of your members as well.
Absolutely.
So we've long had a big team at ABA focused on making sure the fiscal policy is properly calibrated, always thinking about lending, always thinking about things that we can achieve to allow banks to do more lending, particularly to small businesses and the agricultural sector as well. And so we've had some successes, obviously, in the One Big Beautiful Bill. As you both know, a lot of these provisions have expiration dates, so we're going to be back at it together not too long from now.
And how's lending doing? I mean, how's lending? I mean, it seems like things have died down. I mean, a lot of concern just on level of interest rates. Maybe people are getting more accepting of them right now, but how's the lending going?
The overall sector is incredibly strong, as I said at the top. Now, but then you can look and unpack that onion a little bit. Home sales, for example. There's a lot of people who don't want to sell their home because they don't want to reset a mortgage at a 6 when they have one at a 3. So there's some supply, demand, and equity. We're working with the home builders, the realtors, and the mortgage bankers to see if there's policy solutions that we can help create. We haven't come up with the silver bullet yet, but the overall sector is strong. We're not seeing a lot of loan loss provisioning. So no, the sector is in a position of strength at the moment. Interest rates being where they are, there's some, if you're a borrower or you're a saver, you're like really excited or you're frustrated. So there's two sides to where the interest rate, two sides to that coin. So for every person who's frustrated at the rate, there's someone who's pretty excited about it.
Yeah. Well, go ahead, Mark.
Yeah, I was going to, sorry, HR 1, right? So there were some tax provisions in there that should hopefully put money into the economy. Do you see like business lending increasing, small business loans for equipment and the like, or R&D? What do you see on the business side?
We have. The administration is also in the process of trying to as they go into the midterms, try to champion some of these successes in that tax bill. But yes, we see lending. You've seen a lot of bank quarterly earnings over the last 2 weeks. And they've all shown super positive activity on the business side as well.
That's great.
Well, let's talk. We already hit said the AI word earlier, but what are you doing right now? How are you helping? I mean, you said you got 4,000 banks with under 10 billion in assets. I don't know what's the average employee size of those, but you're leaning in and trying to help them think through this massive change.
We have 3 work streams around AI. Now, the first, as I suspect a lot of what your members are doing, and that's coming up with an employee use policy. When is it okay to use AI in your bank, and when is it not okay to use AI in the bank? So that's number 1. Excuse me. The second is helping banks, particularly smaller banks, not J.P. Morgan and Goldman Sachs, but those 4,000 other small banks.
What's the average size of some employee count in those?
Oh, these are 500 million in assets. 35 employees.
35 employees, So it lines up with a lot of the mid-sized, smaller firms.
3-4 branches. That's it. So the first work stream is helping banks come up with an employee use policy. 2, second work stream is helping banks, particularly the smaller ones, come up with commercial use cases for AI. How should they use AI to make money? Is it help around the small business lending algorithm? What have you? And it's not a monolithic answer. What might make sense for one, Bank of Eric might not make sense for Bank of Mark. So helping those banks figure out how to use it in the commercial local marketplace.
Huge opportunity around analytics, obviously.
Yeah, definitely. So that's the second one. The third one is a little scary, Eric. So your viewers may have seen, it was about 6 weeks ago when Mythos got loose. That's Anthropic's model, and it escaped its containment. Well, the White House reached out to us and said, we need to work very closely with you. They also reached out to head of the aviation sector, the utility sector, et cetera. Want to work very closely with you to assess the vulnerabilities of the banking sector and come up with defenses and patches against a rogue AI event. Let's say Mythos decided to shut down all the ATMs in the United States tomorrow. Think about what would ensue following that. So we're working with the highest levels of government on the defense side, the national security intelligence side, to come up with the whole critical financial infrastructure and protect it so we can't be subject to a rogue AI event. So those are our three work streams around AI. It's
they're all important. The third one's national security.
Right. And it's not even necessarily rogue as much as it could be terrorist activity.
100%.
All of it.
Yes, 100%. So that's a big one. We're about 6 weeks into that.
Well, Nat, we talked about it a little bit earlier, but when you think about the evolution of technology, you said, from Excel to ATM to now to AI. These businesses, this is what we see with the firms, they need more advisory support, they need more strategic support, they need more capital. So not trying to lead the witness here, but where do you see this AI movement doing, what it's going to do to your 2 million plus workers in the banking marketplace, and what they're going to do for what's it going to do for value for your
so I don't think there's going to be significant employee displacement. The types of jobs are going to change. It's been morphing for the last 20, 30 years. I think that morphing and that evolution will simply continue, and we'll have more technologists, we'll have more people doing cyber, for example. And so I think the numbers will be reasonably static. Will there be some attrition along the way? Perhaps, like in every other industrial sector. But I don't think we'll be more significantly subject to that than any other industrial sector.
And the attrition would be temporary and then rebuilt into something else. Like you said, the jobs will change.
The jobs will change. Absolutely will change. And we have some offshoring like every other sector, but the bulk of those 2 million jobs are here in the United States.
Well, we just had our Engage conference. We had 200 exhibitors there, tech companies. It was like 4,000, 5,000. It was over 5,000 total attendees. So I'm sure you must have an influx of fintech.
Yes.
So how's that helping, and how are the banks, these 4,000 plus smaller banks, navigating all these fintech options?
Great question. So when I started at ABA 10 years ago, the rhetoric from the fintech sector was a little chippy. It was, we're going to drive you out of business and send you the way of the dodo. And then they realized, oh my gosh, no, we can't do that. We want to partner with banks. So what we're doing is two things, Eric. Number one, we have basically kind of a due diligence team that meets with almost every fintech in the United States that wants to partner with and collaborate with banks to enhance the customer experience. So we have a team that meets with them and does fintech assessments, and we send out white papers, by the dozen, saying, here's a brand new fintech, here's why we think they're fantastic and you should consider them. So we have that group, and we have another group. It's almost like Shark Tank. We do early stage capital investments in fintech companies. So we believe we're the only trade association in the U.S. that has a venture investment wing. That I started about 7 years ago.
We have an accelerator program. Right there. Great minds think alike.
There you go.
So we now will take early stage investments in fintech companies that want to partner with banks. We've done a number of those. And so those two divisions are always assessing the marketplace, so we can come up, and we've created a big partner network of all of these companies, hundreds of companies that want to partner with banks. But I will say that those relationships are great, and the rhetoric has totally shifted in the 10 years that I've been there.
Yeah, I think we've, that this community knows as well. Over the last 10 or 15 years, we've had the Startup Accelerator program. We really cultivate our dialogue with the tech ecosystem. I say I wake up every day and I think about what's going on with the firms and members of business and industry, but I also wake up and think about the tech community. And I've got a lot of relationships with leaders there. And the capital, it's exciting, the capital that's coming in to the market. Well, I want to kind of close up here and questions for both of you on, how you look at the banking community, look at the firm community, they're both trying to be, trusted advisors to their clients. I mean, there's opportunities, I think, even with this session, for us to think about ways to, we did it during the pandemic, but just to connect the banking community in the CPA community.
I think there's no better way inside of your local community. Practicing in Buffalo, we did have relationships with the bank relationship manager with our clients because our clients wanted us talking to them. And I do think it's an important collaboration piece, whether it's networking events locally or us at the national level, figuring out ways to make, small business easier to deal with. I think all of that is a great opportunity.
Yeah, I think all of the above, the two industries work hand in hand and have to and must and should and do. So any ideas of collaboration, and we're all for them.
Well, I mean, it's been a busy session. We've had over 100 questions, comments come in. I was even thinking today we could have done a poll just to kind of get insights on how they are working with their local banker. But this has been a great discussion. Thanks for coming here to New York to be with us. Just great connecting with you, and we're gonna have you back on sometime much sooner than how long we waited the last time.
Yeah, that sounds great. Thank you so much for the invitation. It's great to be with you both.
Thanks, Rob. Good to see you.
Thank you very much. So we're now going to move to a profession update segment with Mark Koziol. Mark, we're going to talk a little bit about what happened over the past couple of days during the AICPA board meeting. It was a real active discussion, a lot of passion. Let me bring the slide up here.
Yep.
And this slide here kind of highlights the hot topics that you were talking about with your board.
Yep.
Maybe tell them a little bit about the board, and then these are topics that we've been pretty front and center with in events over the past couple of months.
Yep, we have a board made up of small firms, large firms, business and industry influencers. It's a really dynamic board, trying to get the sample representation from across all that we do. And in that, so I'm in this role now just over 18 months and 23 days, but who's counting? And in those 18 months, it was important for me to listen to members, and we were getting that feedback, but we also stood up the Rise 2040 project to do strategic thinking out 15 years like we've done. We did it in 2011 with CPA Horizons. We did it in the late 90s with the Vision Project to update that. And so I have been on an extended strategy for the AICPA since I came in. And now that we have the Rise information, we're going to, for the first time, we're going to take that feedback from members, and that's going to drive direction for us and for the profession. And from that, just a couple of key themes, hot topics that came out of that, and some of the strategies that we presented to the board this week. The Trusted Business Advisor and the modernization of that. We've talked about Trusted Advisor for a long time. It's funny, Rob talking about it, how the bank is trying to be that trusted advisor, and they are. I think there's a lot of ways that we could collaborate and each be the trusted business advisor in the banking community and in the CPA community, but we need to modernize that. We need to look at it by segment of the types of work that we do. To become more of an intelligence and foresight ecosystem to help our members with what's happening down the road and what critical information do we need. So that is a big part of how we're going to continue to expand that. Our Engage 365 communities that we propped up this year, we will continue to prop those up in the specific areas. Tax has been really strong. Some of our business and industry groups have been really strong as well, and they're really participative. We're going to continue down kind of service lines in this upcoming year, but then look to how do we create industry-related communities on the different industries that people may be practicing in. And then finally, enterprise data governance and creating foundations around that so that we're able to help our members with data governance and assurance over data governance. So that is AI is in that data governance as well. What are the things that we need to do for the near term and into the future? And then on the next slide, when we talk about the strategic vision, and I mentioned Rise 2040, I hope all of you take advantage of scanning that QR code there on the bottom right and taking advantage of the fact that the RISE 2040 report is out there. This says collected from 6,000 plus professionals. We're now over 8,000 in the last 45 days, thanks to Engage and a few other things that we've done. So it is a good representation of our community. And from that information now, we created a navigator tool. It is an AI-based tool. Tom Hood, who's been running this project for us, I just had a meeting with him today. He started to go through, there was an SME survey that was done by Mark Peterson's global advocacy team. And he uploaded that SME survey into the navigator tool and asked it to say, okay, I'm a small practitioner who serves the SME market. Here is a report about what SMEs are focused on. Tell me what I need to do differently. And it gave them all that information. And it said, would you like a strategic plan around that? Yeah, absolutely. So it creates a strategic plan from it. At the end of that, it says, would you like us to give you some sample marketing tools for that? I mean, that navigator tool is a member of the AICPA. This is a game changer. And so small firm, large firm, CFO, controller, you put in there, what should I be focused on in the next 3 years? What are my top 3 priorities? It's going to help you do that. It can help you establish the priorities and the strategy for your organization as we go forward, whether it's tax, audit, client accounting services, being a CFO, all of that is going to be incorporated into it. Very excited about it.
Yeah, Mark, I mean, it's been this is the power of technology, power of collaborating, putting massive data sets into a large language model and allowing people to leverage all the intelligence that has kind of been, sourced by the crowd.
That's right.
Sourced from all the different committees and members that were involved in that project. There was a lot of discussion around AI across all of these topics at the board over the last couple of days. And I think, RISE 2040 is a very important initiative, but there's a lot of other initiatives like the Profession Readiness Initiative, things that we're doing at CPA.com related to practice evolution.
Absolutely. The trusted advisor modernization we talk about, CPA.com has it for tax, has it for audit, has it for client accounting services, where we really kind of started and launched that. So a lot of great opportunities for us. We want to lean into our members, make it better for our members to do it. Out of the RISE 2040, I think it was something like 94% were optimistic about AI being able to enhance their role, not replace their role. And I think that's what we need to focus on. You heard it from Rob in the banking community. I see it for us. I'm bullish about it. I think we have great opportunities.
And there were a lot of, Mark, there were a lot of good comments about the session with Rob and just kind of us there's a lot of bankers. Guess what? A lot of people said, hey, I work for a bank. This is great having the leader of the Banking Association here. So, all right. Well, now we're going to continue today's town hall with our next topic, which is the DC update. And it's fantastic having Mark Peterson here with us in New York. Obviously, Mark was at the AICPA board meeting this week, and he had a presentation. But there's always plenty going on in DC.
Always plenty going on. And right now, let's go to the picture of DC, Eric. Right now, we're 107 days away from the election. We're going to save that for another town hall. But right now, the theme in DC is jet fumes because they all want to go home for the August recess. And so the House may be getting out here in a day or two. Technically, the Senate's supposed to have a couple weeks to get some work done. I'm going to take you through that. But what they're facing is the end of September and the end of government funding. So unfortunately, we're getting into that conversation about government shutdowns. So there's a couple things playing out there. If you want to go to the next slide, Eric, that we should talk about. So the first is the House actually has passed a continuing resolution, a clean one, which just extends funding into December 4th at current levels to buy themselves some time, obviously get back from the election, and then they would deal with this in a lame duck session. Lame duck could provide some opportunities for some of our other priorities to happen because we are running out of days. I think there are between, depending on how you count it, 10 to 12 working days for the Senate to get something done before the government shuts down. And so the Senate Republicans don't like what the House has passed. They're looking at something with a date closer to November. They want to deal with some other things in that continuing resolution. So again, they're going to have to figure out how they do that either before they leave town or before the 30th, or we're going to be dealing with another shutdown. The other thing that's in the mix here is a reconciliation bill, right? So as everybody knows, reconciliation has very tight rules about what you can use inside that process, but it allows for a simple majority coming out of the Senate. So there is a proposal that will do some defense spending related to that, and some ag subsidies and a few other things. Some discussion about maybe they could figure out the government funding within that as well. Although there's still a lot of controversy between the House and the Senate whether they could get that done or not. Again, for us, that creates the potential opportunity for a vehicle to attach something that we care about. So we'll see how those both play out, but it's kind of go time right now on Capitol Hill.
Well, you've also, you got the tariff discussion occurring as well. Yeah.
We do.
Yeah.
We do. As everybody knows, the refunds are underway as it relates to the Supreme Court ruling on the IEPA, or the Economic Emergencies Powers Act, that was overturned. At the same time, we're seeing what's likely to be other presidential executive powers being utilized. So a lack of clarity there. Refunds are coming in. Businesses are trying to figure out whether they're actually going to just have to send the money back to the government. At the same time, the U.S., Mexico, Canada agreement, USMCA, or the old NAFTA, came up for review. So basically, they had to reconfirm they were going to do another 16 years. The administration said no. It's a little misleading in the headlines because they didn't throw out the deal. The terms of the deal are still in place. They're just going to go to an annual review, which adds to this theme of uncertainty. At the same time, the administration just threatened 50% tariffs on Canada. They have not been imposed, but they've been threatened. And, again, Canada is saying, well, that's not in the terms of what's in place from USMCA. We'll see how that plays out, again, contributing to the uncertainty.
Yeah, and there's lots of questions coming in, Mark. There's, questions about just, what's going on with the current Senate makeup. Some obviously senators, passing away.
It's
other
tight.
senators,
It's tight.
Being sick.
They have, even the House. I mean, if everybody's there, both the House and the Senate, the Republicans have 4-seat majorities, but that means everybody's got to be there. And so right now, the Speaker Johnson in the House is only working with 2. And Leader Johnson has to deal with who he has left. Obviously, there's been some issues with Senator McConnell's health. Senator Graham passed away. His sister has actually been sworn in, so she can vote. Right. So it's close, but on any given day, it's hard to get something passed. So, that's going to contribute to what the fall looks like.
It's almost amazing that they're still getting things passed.
It's a human institution, and things happen. And when the margins are this tight, it's really, really tough. Now, another issue that's going on relates to crypto, and you guys discussed this a little bit in your Rob Nichols segment. That legislation is out of the House. The Senate is going to try and get it done in these few days that are remaining. There's controversy around it, unrelated to our issue. Our issue is that there is language that we would like included that would give us some clarification about confirmations and controls around reserves. So there isn't necessarily opposition to that, but what it is they're worried if you pull a thread, will this whole deal, which is very precarious, unwind? And there are a lot of big players between crypto and the banks and others that are putting a lot of pressure on this package. But both sides want to get it done.
You think the Clarity Act's going to get done?
I don't. I think that thread's going to get pulled. Right. It's possible, because when you get to what you need is a burning platform, right? You have to have a deadline of either going home for August or going home at the holidays in order to actually push an event. And so if it's going to happen, it's probably going to happen soon, but there's still challenges.
And what's the likelihood? August recess is here.
We're here.
Yeah. So,
well, the Senate's working on it, so we'll see. It's possible, but it's a stretch.
Yep.
Well, we got a couple more slides here, Mark.
A couple more quick issues.
We got time.
And I had mentioned this NDAA, which is the Defense Authorization Bill, is one it's going to happen. It always does. It's a must pass. They'll figure out how to get enough votes for it. In that, though, is some language, I mentioned this on the last town hall, Eric, that the goal is that because there's going to be so much public funding, taxpayer money going into defense spending, that those companies that are producing arms will invest it in the production of those arms and move quickly, and there won't be stock buybacks or significant executive comp. That's the goal. And by the way, that's supported in a bipartisan way. The problem is the way it's written, it prohibits capital distribution. Well, guess what? That's how partners get paid.
Sure.
And so although it's not focused on the firms that are, this is only relevant if you do defense consulting. Yep. This is elevated and snowballed very quickly. My team in DC is already having conversations about the impact on the profession. Feedback is we were absolutely not focused on you. This is unintended consequences. However, we aren't quite sure how to fix it. Regardless of what happens, there's going to be a conference between the House and the Senate. So there are going to be several shots at getting this fixed. And this doesn't have to get done between now and leaving for recess. So got a little time to get this fixed. I'm optimistic that we'll get fixed, but it is a concern.
How many times has legislation passed where they said, well, it wasn't intended for you, but then it was, and now we got to go fix it?
Absolutely, most of the time.
Yep.
Well, and Mark Kozel, I want you to comment on this as well, but why don't you, I mean, this is a big announcement that came out last week, or this week from the PCOB.
It was.
Yeah. Well, they put out their strategic plan, and they've been, you know, we've from the speeches and from the public statements, we've seen a very different direction from the SEC. And the direction that the SEC is giving the PCAOB, a real focus on modernization, a different environment around inspections, focus on quality management and risk. And so I think there's a lot of opportunity here that those of you that are in the public company auditing business are going to feel. But as we say, that the clock is ticking, right? Before there's going to be a new administration, you know, regardless of which party, we could see changes there. So I think they're moving ahead in earnest. There are a lot of these modernizations that we're welcoming and we're commenting on.
Well, so, you know, for the first time in the PCOB's history, we have a chair who's actually a CPA.
Yeah.
Right. And so the only requirement, I think, in law is that there's at least 2 CPAs that are on the board.
That's correct.
We still only have 2 CPAs on the board, but having it as chair, Jim Logothetis is the chair. We've met with him a number of times. We've provided feedback with him. We're getting his understanding. He even said, look, you know, the number of inspections that we have, the number of files that we look at, maybe less, maybe the same, maybe more, but we're going to look at them differently based on what we do. Yeah, we're going to do quality management up front, risk oriented, only look at the risk areas, and let's be more proactive about providing feedback so that the things that we do find could be corrected going forward.
Absolutely. And well, you know, one of these points is deep in stakeholder engagement. Well, we're a stakeholder.
Yep.
And we've felt that. Doesn't mean we're always going to get what we want or we're always going to be happy, but it certainly helps to be able to communicate.
Yep.
And there's a lot of tools that we continue to work on to put into the marketplace based on kind of helping firms with their quality management processes, based on firms moving to a new modern methodology that's highly risk-based. So I think this is, and then what they're trying to do here is put a framework in place, Mark, that hopefully lasts beyond, you know, their term.
That's right.
That's
Durability.
their goal. Durability.
And for our members, it's the yo-yo, right? It's the constant change of administrations that, you know, for 4 years, it's, you know, the appropriate level of oversight. And then for 4 years, there's a accelerated level of oversight. And do I want to be in the business? Do I not want to be in the business? And I don't think it's helpful to the capital market, to be honest.
No, it's not.
Well, Mark, great. We'll stay around, and we'll have you back for open forum. And I'm trying to sort through some of these questions right now. So let's continue on. We do have Daniel Huff with us from the DC office. Good to see you, and look forward to the technical update.
Nice to see you as well. Good afternoon, everyone. So we're going to start off. Last town hall, we mentioned that the IRS introduced their new automatic exemption from penalty, or AEP program, which is going to replace their first time abatement, or FTA program. So the AEP program is virtually identical to the FTA program. It still has the 3-year clean compliance history requirement, except that this would be automatically applied rather than required practitioners and taxpayers to request it. So AEP fully phases in it by 2027 and FTA fully phases out by that date. However, there could be a lag for some taxpayers. So if you do think your client qualified for AEP, then it's definitely worth looking into and seeing if they can also qualify for FTA. This program is applicable for failure to file, failure to pay, deposit penalties. It's specifically not available to daily delinquency penalties, penalties associated with infrequently filed returns, and then information reporting dependent on another filing. So although this program is nearly identical to FTA, it does raise some questions. One example is FTA provided an exception for 5471 and 72 forms. So if you had a late filed 1065 or 1120 and that penalty was abated, then your 5471 and 72 penalty was also abated. It's uncertain whether that same exception qualifies. Reasonable cause is another concern. IRS has stated that it will not accept reasonable cause to be eligible to overturn or reverse that AEP relief. So this is primarily concerning, let's say there's a delay in processing that results in a penalty, and maybe it's not the taxpayer's fault. The IRS will apply that AEP relief, and therefore the taxpayer, it's used for that 3-year period. This was a significant consideration in our recent comment letter to the IRS on the FTA program. There's a link to that on the slide. This is a new program. We'll keep updating you as new information comes out. And there's also some additional resources on that slide. On the next slide, we're dealing with IRS operations. So we wanted to note that IRS recently removed the delinquent FBAR submission procedures from their website. We weren't quite sure what this meant, but IRS did clarify that in the end, this program remains available, and it's just not going to be available on their website. So the taxpayers who are eligible for that relief, they can avoid that late FBAR penalties if they satisfy the requirements there on the slide. And then on IRS leadership, Ken Keyes had been Assistant Secretary of Tax Policy and also acting IRS Chief Counsel. As of July 21st, that'll now be Kevin Salinger will assume both of those roles in acting capacity. Also note that James Gadwood has been nominated to serve as IRS Chief Counsel. So at least one of those actings is set to be temporary. And then on the next slide, we'll go into disaster relief. So for all the states mentioned, listed here, the tax deadline has been extended to November 2nd, 2026. So you want to take a look at the start date for those disasters, and anything in between there, any deadlines in between there, the filing deadline is now November 2nd. Some of these are a bit narrower than others, like Louisiana, that only includes 4 parishes. Mississippi, that only includes 5 counties. So you really have to take a look at the notice or the news release, and those are linked on the slides there. Additionally, we've heard from numerous practitioners that the IRS has been issuing letters 916C for qualified disaster loss claims. If you recall, these are the amended returns to claim that retroactive tax relief. It dates back to 2021. That was through the FDTRA of 2023, and then HR1 also extended that a little bit. So the relief under that includes a waiver of the 10% AGI limitation. It also allows taxpayers to add those qualified disaster losses to the standard deduction. So the letters themselves, they are stating that the claim may not be processed for failure or for lack of substantiation. And from what we've heard, there shouldn't have been a lot of substantiation with these claims other than amended return, the necessary forms and schedules. So that's one issue with that letter. But I think a bigger issue is that they're stating that taxpayers may file a new refund claim with that supporting documentation, which if you did file a new claim, a lot of these taxpayers the amended returns are going back to 2021, 2022. So the statute of limitations is run. Those new claims would be denied anyway. So we've reached out to IRS for a little bit of clarification on this issue. But it seems that following up with the IRS on the existing claim, possibly reaching out to Taxpayer Advocate Service, those seem to be like more appropriate actions versus trying to file a new claim. For more info on our disaster tax relief, we have linked our disaster resource center there on the slide. If you just look at the QR code, that is available to our tax section members. And then on the next slide, we've got our round robin issues. So the IRS has updated or enhanced their business tax accounts. There's more notices that are available on there. Designated officials can now download EIN verification notices, and those can be used in lieu of the letter 147C. And it also allows for submissions of offers in compromise. Then we have a TIGTA, or Treasury Inspector General of Tax Administration report on the enterprise data platform. And really this is going into this would give the IRS employees that full 360-degree view of taxpayer data that they've been talking about for quite some time now. So of the 59 data sets that they were looking to integrate, they also found 9 additional ones that they've already integrated. But of the original 59, they've done all but 22. Those are set to wrap up by the end of 2026. So that integration phase for their Taxpayer 360 platform is almost completed. And then finally, for tax-exempt organizations, the IRS released Form 15644. That's that's for central organizations who are going to be giving some sort of update on their subordinate organizations, whether it's additions, removals, terminations. So that's their most recent form. And with that, I'll turn it back to you, Eric.
Thanks, Daniel. We'll bring you back for open forum. Thanks for those updates. So Mark Koziel and I are going to cover a couple of resources and other updates, and then we're going to go to open forum. So first off, and Mark, this is something that we've been talking about. We want to support the broader firm. We want to support the broader financial department in business and industry. So we got a lot of feedback that at some firms there's colleagues there that they're not AICPA members because they're not a CPA, but they're they're part of, say, the client advisory services area or tax area, some area, and they'd like to join the town hall. So now you can have your colleagues join the town hall, go to this link, follow the process. So Mark, comment? That's
good. I mean, we're seeing more and more. I mean, there are, while we want CPAs, we want everybody to be a CPA. I keep telling all my friends' kids to be CPAs, but inside the firms today, we do have a mix of technology professionals and attorneys, and and there are things that I think are important for the entire organization to hear, not just our members. And so we recognize that at times.
So they can, through that link, get complimentary access. So we're also kind of continuing to try to better understand the transformation that's going on in the tax area. I mean, it's going to be a dramatically changing landscape over the next few months as we start talking about the next tax season and all these technology capabilities. If you fill out this tax transformation survey, you'll have access to additional data. So I recommend that you take advantage of that opportunity. We also, Mark, this is something that a lot of people have appreciated you restarting the print edition of the J of A, and this is summer reading. These are digital. I mean, sometimes I say it's good to be digital, it's good to be analog at times. But we just put together a summary of some recent J of A articles.
It's a good reading list, and they all are primarily digital. A couple of them were in the June edition. Hopefully you all, as members, got the June edition print in your home or your office. We did bring that back. It's going to be quarterly. And we really good feedback from that a lot of members who were really happy to get that back in hand and be able to see it, and also to go to digital when they need it, but know that some of the important stories they're going to be able to get in their mailbox.
It's analog still works at times. Talking digital, we've got our digital CPA in-person event. It's going to be in San Diego this year. You can take an opportunity to take advantage of this early bird special. So let's now move to our open forum session. We got a lot of questions here. So Mark Peterson, I'll kick it off with you. Is the SAFE Act still something we can hold out hope for, the extension of the protective estimates? And then maybe a little clarification. SAFE Act, it seems like there's a lot of SAFE Acts.
Lots of things get named the same. So this isn't about cannabis.
Right.
This is actually an automatic extension from previous, if you 125% of previous year. Okay, so we've been supporting this for a long time. Practitioners love this idea. I hear about it a lot when I get off stage. Yes, there's a possibility. There is a bipartisan package. We've been working with the chair and the lead Democrat on the Senate Finance Committee. It had kind of hit pause for a little while, but there are rumors that we could actually see it come out of the Senate Finance Committee before they leave in August. So it's still progressing. It's got the automatic extensions. It also has language in there related to the regulation of paid tax preparers, which is another one we've been working on for a long time to see clarification around there and make sure that the responsibilities that the IRS puts on a firm make sense.
It's good to hear from Rob, by the way, too. Some of the legislation that they want to get passed, it's in 7 years they're still working on it, and so I tell our members,
it's not easy.
It is a long haul. We try. You're going to sometimes hear the same proposed bill over and over again, but someday, like the reconciliation bill and some of the things that get in there, it takes time, but you be patient, and eventually you hope to get it in.
Yep.
Well, Mark, I mean, we call this our news show, but there's been comments about the playing of the commercial, the CPA trust commercial to start here. So it's great to get it out. I mean, today we have 15 to 18,000 listeners that rivals some cable shows. But the questions are, where else are they seeing it? We've been talking about FIFA. We didn't necessarily see it on the World Cup. So what's the strategy?
World Cup, it
was great.
It's an expensive.
I was upset that Argentina lost. I don't know if that's gonna. I was rooting for
something else. Hear about that. Yeah, that's the thing about the commercial. We were very focused on where we wanted to be. We know business leaders. Political influencers, politicians, and regulators are all inside the news segments of early morning TV, and that's where it ran. And I will tell you, so the town hall community, we talked about it at Engage when we did that. Not everybody was happy to hear from me that the grandmothers weren't the target audience, but I get it. They're still great clients. I still love all my grandmothers equally. And I'm almost in the grandparent stage myself, but we hit big. I've had a number of policymakers that have reached out to us after they've seen it. Mm-hmm. We had a big billboard, CPA's Trust in Tax. That was the primary one that you saw walking into the Washington Nationals games in DC. I had a number of members from Florida to Oregon to Texas sending me snapshots of them seeing the commercial as it ran. We did a 3-week buy at the launch of Engage back in June. We're quiet now because the summer months now, we know that it's harder to get to the policymakers right now. We may do another campaign in the fall, but we're doing a lot of social media around it. And also here in the office today, we are in the process of filming a documentary that will end up on CBS I think sometime in the fall, in honor of the 250th anniversary of the country. How have CPAs impacted the growth of the country over those years? So we're excited about that too. Just getting out there, we are the trusted profession.
Yeah, well said, Mark. And I even think us on this town hall bringing in other leaders is another way to kind of get our message out there. I mean, even like today, having Rob Nichols now be with us today, take that message out of the banking community. So it's connecting with others. All right, we're in lightning round here, so both of you can kind of take a portion of this, but just guidance, and advice to firms related to these tariff policies, advising on them, managing them.
We have a resource center.
Yeah.
I would definitely recommend. I'm not sure if it's in our resources.
We'll put in the newsletter.
We could set it out.
Yeah.
Again, we try and keep it updated. A lot of questions that I get, again, are not necessarily about the importer, but is the consumer going to see any of this? The answer is probably not. If they do, there's no mechanism. So it would be very specific legal action. But it's playing out. The question business has, though, is this over? Like, do I hold this in reserve because I'm going to have to pay it again anyway? So even if you're lucky enough, again, to get the refund and make it through the process, and that is happening, lots of money's gone out, billions of dollars has gone back, but they're going to be reimposed.
It's uncertainty. So Mark, 15 seconds here.
Yeah, uncertainty. I mean, that's the thing. I'm sure many clients and people who are in business and industry worry about it. As Mark said, the resource center is there. Like we launched this town hall back 6 years ago around uncertainty. We will provide the information as we can. We have the resource center stood up for it. We are in constant conversations inside of DC, but there still are a lot of unknowns. The government doesn't know.
They don't.
So we are pushing as hard as we can, and as we have information, it's going to be propped up on that resource center.
Well, Mark Koziol, Mark Peterson, thank you. Danielle, thank you. Great being together here in the New York studio. So thanks to everybody for being with us today. We've got all of these different town hall resources. We'll be with you next in a couple of weeks. Hope you all are getting a little bit of downtime during the summer. We know Congress is going back to their districts and some vacation. So hopefully you'll have an opportunity for some downtime with your family and friends. Yep. Mark, I'll let you close out here.
Enjoy the summer. Thank you for being a member, and we hope you get some downtime. That'd be great.
Thank you for your participation. You can also subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and find resources at cpa.com/townhall. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.